Good morning, you're watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are the biggest stories to kickstart this trading day Thursday. Remittances sustained their growth in April, and economists expect this expansion to continue despite risks of a global slowdown.
Now, incoming Bangko Sentral Governor Felipe Medalla says the Monetary Board will likely raise interest rates at its next meetings, but the pace of tightening will be gradual.
Over in the United States, monetary authorities make a bold move to tackle inflation. The U.S. Fed announces its biggest rate hike in nearly 3 decades.
And the local car industry is confident to achieve recovery. That's as vehicle sales jumped by almost 20% last month. We begin our broadcast with remittances growing by 4% in the month of April.
That's as more Filipinos have been deployed overseas on the back of the further reopening and easing of travel restrictions abroad. Data from the Bangko Sentral show that cash remittances sent by overseas Filipinos increased to almost $2.4 billion in April, with the growth buoyed by remittances from land-based workers with long-term contracts. Economists expect continued growth in remittances in the coming months. That's despite the threats of a global economic slowdown and lingering geopolitical risks. The Bangko Sentral hopes remittances to grow by up to 4% this year. For the first months of the year, cash remittances increased by 2.7% to more than $10.1 billion. Now, incoming Central Bank Chief Felipe Medalla says the BSP will likely raise policy rates in the next 2 meetings, but he ruled out hikes bigger than 25 basis points. Medalla tells Businessworld editors that they will surely hike interest rates next week in a bid to curb inflation. He says it's likely that this will be followed by another increase in August. Medalla admits, however, that he personally does not want hikes to exceed 50 basis points.
And in other news, despite an uptick in COVID-19 cases, Metro Manila will remain under alert level 1 for the rest of the month. Health experts also say the situation remains manageable and there's no need for tighter restrictions for now. Mobile journalist Pamela Vasquez with the details.
Alert Level 1 stays in Metro Manila. According to the Health Department, while there is an uptick in infections, it's still way below metrics to warrant an escalation.
We need around to have 6,000 plus cases per day nationally for this about 2 weeks para maka-reach tayo dun sa Alert Level 2.
So far, the country tallies 270 cases per day on average. 170 of those are in NCR. But while numbers are still low, Vergere tells the chiefs COVID admissions might increase come August should booster take-up remain low. The second booster dose is still not yet rolled out to the general population.
Ang ating pong uptake would be just around 14.5 million. Towards August, siguro for September, hospitalizations might increase because severe and critical will increase because of the waning immunity.
So far, what's filling hospitals are non-COVID patients. But the Private Hospitals Association of the Philippines says their COVID wards are ready to take on a possible surge in COVID cases.
The COVID wards are actually separated from the non-COVID wards.
The business sector is not even amiable to a possible return to Alert Level 2 with the economy still on demand.
Bakit di natin matanggap na talaga tayo nagno-normalize at lagi na lang may naiisip na problema?
To avoid that from happening, the DOH is adamant. Health protocols must be followed, especially the wearing of masks, even as some local governments are now considering to follow Cebu and make it optional. Mobile journalist Pamela Vasquez, We Are One News.
The Philippines' export sector is expected to hit a speed bump as China reimposes stringent measures to address COVID-19 cases. That's according to the latest short-term forecast of the Japan Center for Economic Research. Sir said the country's exports, along with Indonesia, Malaysia, and Thailand, may fall in the second quarter and is expected to have a modest recovery in the third quarter. The research group explains that the downward pressures from China's economic slowdown and the distortions in international trade will affect exports during this period. Recall that exports slightly increased by 6% in April, with China remaining as the top destination for Philippine products. Just how much of a hit is the country's export sector bracing for? Let's talk about that, among other things, with George Barcelon, Chairman of PhilExport and President of the Philippine Chamber of Commerce, or PCCI. George, good morning. Thank you for joining us.
Good morning, Jess, and good morning, Daniel.
Okay, so we'll touch on that export report later. But for now, again, an earlier report that we had this morning, alert level 1 stays in Metro Manila. But then again, you have a number of experts, even the DOH, warning of upticks in recent weeks here. A lot of talks have been raised about the possibility of Metro Manila reverting to alert level 2. Is that something that the private sector is even amenable to? And are you ready for that?
Jess, I think at this moment in time, it's really premature to talk about raising the alert level. If we stick to our basis of the severity of the infection, it's really regarding the flattening of the curve. We're far from it. Mga hospital, may mga hindi pa na pupuno, at saka yung mga may sakit na hospital, hindi naman COVID. Ngayon sa panahon ngayon, medyo mainit at saka we're shifting the weather change. Maraming din mga flu, mga sipon. So I'm not worried about that. And I think the health department should just remind the citizens to be careful if they meet somebody na may sipon o may laknat, they have to take care of themselves. No? But otherwise, I think the economy will be of great. This will be of great help to the economy if we open up, the normalization of business.
Okay, sir, and that's the last thing we need right now, given that the oil prices are really impacting. Dati stay at home dahil sa COVID, ngayon stay at home dahil mahal na yung bilihin. Sir, how are companies responding and how agile are they, is the private sector, with this persistent inflation that's going on, and how affected are the industries? Is there anything else that can be done?
This is a real challenge to us. Although here, at least, through the effort of the government, like earlier, there was talk about raising of interest. That I can see that the government is also carefully assessing the situation. They're assessing it whether the Federal Reserve in America will raise interest. They will raise interest by about 75 basis points. It may not happen. So if as what was reported by the incoming BSP governor, mga 25 basis point yung next increase for next month, I think that's tolerable. From the business sector side, if you notice, the sectors has a balanced view on inflation. If there's no extreme inflation, they have not, as we have witnessed in the past COVID-19 lockdown, tumaas yung cost nila, even bringing in workers to the plant and a lot of compliances, but they have not increased their prices of goods and services. And I think this is much appreciated from the consumer, that the business sector always try to balance things. But the headwind is there. Hindi natin maiwasan kasi tumaas ang crudo, tumaas ng pagkain, yung mga wheat, yung mga tungkol sa energy, coal, palm oil, and I have to submit, I have to be very frank with you, sooner or later, makaroon ng increase sa presyo. But I have mentioned, I have the occasion to talk to the incoming Secretary of Trade and Industries. And I shared with him, Mr. Pascual, I said, under this situation, talagang kailangan yung government, private sector, mag-cooperate We don't want to hurt the consumer too much, but at the same time, ayaw rin natin na halimbawa gipit sila ang mga manufacturers, then they will produce less, and that will create a certain artificial demand. Itataas din ng presyo. So this is where we have to balance things, no? We have to be cognizant. Yung pera natin, yung peso natin, nag-devaluate din.
Oo.
53.30. Ang projection, baka umabot ng 53.50 or beyond. So if you think about that, in the past a month or so, may indication na yung pera natin na nag-depreciate. But the business sector has been still very quiet, and they're just observing how this will go. So it's a wait and see, but it's a concern.
Okay. But sir, like you mentioned, you're trying to hold off on passing this to consumers, no? But there have been calls na for wage hikes from the transport sector. And of course, there will be calls for higher increases in wages as things get more expensive.
Some of which have already been approved. Yeah.
Yes, sir. How will you balance this in the PCCI in terms of, keeping, like you mentioned, the production at bay and the costs of production there, but also having to cater to people that need higher incomes to be able to buy the same goods?
Daniel, the recent increase in wages, though, that definitely has a direct cost to production. And there has been clamor that the private sector, like our organization, have been hearing our members request that we have meetings to talk about this inflation issue. In 2 weeks' time, we have a new government, di ba? The incoming government of BBM. So I thought that it's better to wait, until the new government comes in. They have more rooms for maneuvering, and then the private sector will take this up with them. We don't want to prematurely, have added burden to the incoming administration. But we have to face facts. We have to face it. Sa tingin ko, I think probably June, walang choice ang Department of Transportation na itataas nila yung pamasahe. Sa dami ng mga gustong bumalik sa trabaho, they need transportation. And with the prices of crude, Brent oil, kung ano man, they're reaching $120 per barrel. There's no way for you to squeeze na you can maintain the same price for transportation. So we are taking all of this into consideration before we take a move.
Now, earlier, Danie was talking about how in the past, at least over the past 2 years, workers were being asked to work from home due to the COVID situation. Now it's a totally different scenario here. Is hybrid work becoming more and more of an option as well for the private sector due to the soaring prices?
Yes, I believe so. But there are certain functions of the workers that requires them to be on premise. No? Like in my company, in my IT company, noon pa, ever since when we had from ECQ to MECQ, yung pinayakan na yung mga tao na lumabas as long as they wear masks and then shield. We already have them coming in, reporting, but we have to charter, the transportation costs, and it adds a lot, no? But now, we would like to resume operation. Sana nga lahat, kung pwede, face-to-face. But there are, I told my management, I said, alam ko, spoiled tayo. Maski na ako, spoiled din kung may meeting, naka-jacket ako, pero alam mo naman, naka-short lang ako
Correct.
Okay. Naka-chinelas na ako Di ba? And I admit to them, sabi ko, maski na mga management spoiled. But we're striking a balance. Actually, I told them, yung mga pwede naman sa work from home and they are still maintaining the productivity, okay lang. We will work out a scheme wherein they have to report occasionally. It lessened the traffic. Okay? And karamihan ng mga sales, sabi nila, alam mo yung isang oras na bawasan sa biyahe, they are putting it to good use. Okay? But at the same time, we realize that I said, our challenge is to, how do we change from this totally work from home to a hybrid and maintain the same productivity, or if not, higher productivity. Kung hindi, sayang naman yung mga rentahan namin. We're paying for rent, but people are using it. Kaya it's really a balance na we, like in our company, and a lot of companies during the COVID-19, yung mga medium, large size, they have not let go of their people. And I want the labor sector to realize that. Na ang mga negosyante, alam nila na during the difficult time, the bayanihan spirit was there. And I think they appreciate that. No? I know that we're rebounding back. I hope that they are cognizant of the fact that during this hardship, the management has shown their sincerity, their compassion to the workforce.
Sir, can we shift the topic po to exports and your outlook on that, especially with the continuing lockdowns in China doesn't seem to have an end to that. But at the same time, one bright spot, perhaps if you can call it that, in terms of the weakening peso, might be advantageous for our export sector. Are you seeing that at least in the short term?
Yes, I see that advantage, giving us some advantages, no? But the overall impact of the supply chain, that's the one that's of great concern. Of course, lately, the ports in China, they have resumed more normal operations. And alam mo dito, ang export natin, aside from the agri, fruit sectors or agua sectors, yung mga ibang products na may kailangan ng raw material galing sa ibang bansa, they're really affected because the shipments coming in are slow. And on the flip side, the shipment going out are very expensive.
Okay.
Masyadong mahal yung shipping, yung freight charges. Yung sa North America, umabot ng 300% more. And we have here clamoring of mga constituents namin that we should talk to the shipping line regarding this matter. And there's also the other issue wherein the PPA would be implementing a new tracking system for containers. With nothing against it, parang if it's done well, no? But we've consulted the customs. Sabi ng customs, they're doing it already. Itong bagong sistema ng PPA, may isang kumpanya na pinapag-aral yung mga procedure, the cost will be shouldered by both exporters and importers. And this is what we have been, we brought the issue to Bureau of Customs, no? Na have them study this because carefully before implementing. Because the exporters, importers are at this point in time shouldering a lot of unnecessary expenses. Sana man pag-aralan nila. And then, in a way, those are, if they can be postponed, it will mean a lot for the small exporters.
Okay, more on the exports here, George. You have the likes of Thailand and Vietnam restricting the export of certain agricultural goods. Is that something that the export sector or even the government is considering, primarily because you have a shortage of basic goods and materials here?
Just there, I mean, that is a very, this point that you brought up is it's of concern, no? Because yung nabasa ko, they're limiting their export of rice. Okay? And we know every year we import about 18% of rice. I believe it's 2 million tons. Having said that, again, the supply and demand issue, no, tataas yung natin, yung bigas natin. And that is also will affect the inflation. Of course, we cannot blame yung mga produkto natin, yung mga pandesal, mga tinapay that use wheat, no? Ang wheat tumaas na almost 200%. At saka sa mga magsasaka, they are also shouldering the high cost of fertilizer.
Right.
Tama.
So,
Okay.
all of this together, kaya yung kanina nabanggit ko, it's very important at the get-go with the new government. No? Sa ngayon, wala pa yung Secretary of Agriculture, wala pa yung Secretary of Energy. These are two key areas that we, as exporters, as manufacturers, are keenly waiting because they play a key role. No? Yung bagay na sa power, we are already one of the highest in the ASEAN region. Kaya yung mga investors, kadalasan that's what they talk about. Mahal yung kuryente natin compared to the others. So whoever is going to sit in the Secretary of Energy really must have a long-term plan, doable, pero kailangan may short-term actions. Kung halimbawa, katulad yung last May, ang concern ng kasi yung dam natin bumaba yung tubig. And there were certain weeks na alert level was yellow. Ibig sabihin, marginal ang reserve natin. Kung may base load generator na may problema, maintenance, brownouts na mangyayari sa atin. So, these are issues that we are aware of. We are keenly communicating with the government. So, these two is very important.
And just like you, we also are, of course, waiting for those appointments in the Agriculture Department and the Energy Department.
Balancing act talaga, sir. Thank you so much for your insights this morning. That was, of course, George Barcelon, President of the PCCI. Thank you, sir.
Here are the other headlines we're keeping our eyes on. The country's automotive industry is confident of its recovery after vehicle sales rose by almost 20% last month. Industry figures show that vehicle sales reached over 26,300 in May. That's higher than the 22,000 in the same period last year. Month-on-month, car sales increased by 4.9% from April's 25,000. The Chamber of Automotive Manufacturers of the Philippines, or CAMPI, says the auto industry's growth reflected the pickup in economic activity after the further loosening of mobility restrictions.
Now, the Fiscal Incentives Review Board, or the FIRB, is flagging PEZA for its supposed inadequate accounting of investments brought in by its locators. The DOF said in a statement that PEZA submitted incomplete information regarding some of its locators' investment levels and markets served. That's after the agency asked it to produce such data. In response, PEZA simply said its deadline to submit its reports to the FIRB has not yet lapsed. Hence, the statement of the FIRB was, quote, erroneous and misleading and designed to embarrass PEZA. The government was seeking the data to monitor the locators' compliance with the CREATE law in order to determine their eligibility for incentives like tax holidays and lower corporate income tax.
Pausing for a quick break, but coming right up after that. We'll check how stocks are moving this morning following that big rate hike from the U.S. Fed.
More of that and other stories when Business World Live returns. Stay with us. Jess, 1, 2, 3.
And you're still watching Businessworld Live here on One News. I'm Jess Delos Santos.
And I'm Danie, Laurel.
The U.S. Federal Reserve raised interest rates by 75 basis points. That's the biggest increase since 1994. And Fed Chair Jerome Powell says another sharp rate hike might be implemented next month to get inflation under control. Let's listen in.
We're strongly committed to returning inflation to our 2% objective. Inflation has again surprised to the upside. Some indicators of inflation expectations have risen, and projections for inflation this year have been revised up notably. In response to these developments, the committee decided that a larger increase in the target range was warranted at today's meeting. Clearly, today's 75 basis point increase is an unusually large one, and I do not expect moves of this size to be common. From the perspective of today, either a 50 basis point or a 75 basis point increase seems most likely at our next meeting. But I think the fair summary of what we see is you see continuing shifts in consumption. You see some things getting sales going down, but overall spending is very strong. The consumer is in really good shape financially. They're spending. There's no sign of a broader slowdown that I can see in the economy. People are talking about it a lot. Consumer confidence is very low. That's probably related to gas prices and also just stock prices to some extent for other people. But that's what we're seeing. We're not seeing a broad slowdown. We see job growth slowing, but it's still at quite robust levels. We see the economy slowing a bit, but still growth levels, healthy growth levels.
All right, and analysts had started predicting this early on, but it's pretty hard to get over the highest rate hike since 1994. Our market's not done reacting.
Exactly that, Jess, but now reacting on the positive side. So it's more of the future actions and the language of Powell that mattered yesterday. We heard that. And while he said that, the Fed can move either by 75 bips or 50 bips, what he did say to save that day was that, it is something that is rare to happen. So that's something that equity markets really cheered upon, especially because they critiqued the Fed for not having acted fast enough, for not having anticipated this inflation. And also they have this feeling that, it's better to end the pain quicker rather than prolong the rate hike. So you can see US stocks and even Europe and the bunch of Asia, let's take a quick peek at Asia, opening in the green here on the back of that language that, okay, maybe these rate hikes are warranted, but it might not be continuing forever. Now let's take a look at how our own markets are doing. Following suit here, enjoying a 0.7% bump up, but clearly still well below the 6,400 levels, which we slid at yesterday in anticipation of that 75 bips. So of course, Jess, it's going to really be the emerging markets that are going to have some pain here. I'm just going to pull out for you guys the net foreign fund outflows chart, where you can see, okay, this is a little bit of a weird chart, but you can see that it's really all red Fed here, and there hasn't really been, except for this one line here, saving grace of net foreign fund inflows. We've actually slumped as well because of the fact that net foreigners continue to exit. And another one that will be feeling some pain here is the peso, of course. You know, this as our rates might not be keeping in step with that 75 bips. We do have our incoming Bangko Sentral Governor Felipe Medalla saying he's looking at 25 bips. And, you know, that's very, very far from the 75 bips that the U.S. Fed has done. And we've seen our peso declining to the lowest level since October 28 on the back of those Fed moves. Now, finally, I just wanted to take a peek at one stock this morning, and that is Vista REIT, which, of course, as we know, did the IPO yesterday. It's still trading below the IPO price. It ended the day at 1 peso and 75, just smacked at the IPO price, but now opening again in the red. Yesterday, it lost as much as 9% during the trading day. And this, according to Philstocks Financial, the weakness of the IPO of Vista REIT is because of its leasing portfolio that is vulnerable to COVID surges. Of course, this is mainly malls, no? And there's a chance that it might not deliver the distributable income forecast. This, according to AP Securities, investors now ignored the Vista REIT's yield, even though it's the highest, because of skepticism. Now, note that 85% just of the tenants of Vista malls are actually anchor tenants, mostly with affiliated companies of Villar. So there's a real question on that, whether these tenants will be delivering the numbers. And finally, from Cole Financial, occupancy rate still is low, lease rate isn't fixed and contracted for malls. So still some risks on the table for Vista Land's REIT IPO, which is trading at 1 peso and 72 centavos.
All right, let's see if those gains in the local bourse will be sustained throughout the trading day. That's a first look into the business day this Thursday, June 16, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danie Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.